So for more insight now into this banking bombshell, we go live to Florida. We welcome global economy expert Dr. Michael Szanto from Miami. Thank you so much for joining us on this day. So we heard there Joe Biden is adamant the U.S. banking system is safe. Is that the case given the stunning collapse of two banks? Your take on the latest assurance from the American president?
Yes, it's absolutely very safe. We have FDIC insurance up to $250,000. With this particular bank, the FDIC is saying it will insure all the depositors. And absolutely, our financial system is safe. But if you're in a regional bank, ideally, you want to keep your accounts below $250,000, which is the limit. It hasn't been raised, for other banks except for this failed bank. But absolutely, the U.S. banking system is entirely safe.
Well, that certainly would be a relief, particularly for small business owners. American officials say depositors can start accessing their money on Monday morning. So talk us through this expansive emergency lending program intended to prevent a wave of bank runs, which would obviously threaten the stability of the banking system and, of course, the economy as a whole.
So the first thing that was done is for this Silicon Valley-based firm, the FDIC stepped up, backed by the Treasury Department and the Biden administration, and guaranteed all the accounts because there were a lot of Silicon Valley firms, even a pretty big one, Roku, and a bunch of startups that would have trouble paying salaries because a lot of them had millions or tens of millions or even 100 million in this bank. So they said, okay, it's no longer just limited to $250,000. All your money is available. Then the main special program nationwide is the problem that caused this particular bank to fail is they had invested in a lot of long-term bonds, safe, like government agency bonds, but long-term, right before the Fed started to raise rates really rapidly. So short-term, the prices went down, but then people started to pull out money. And so if the bank had been able to hold these bonds till maturity, like 9 years later, it wouldn't have lost any money. But by being forced to sell, bonds go down, particularly long-term bonds, when interest rates go up, they were facing billions of dollars of losses that they couldn't cover fast enough. So what the Federal Reserve is actually doing is they're loaning money so that this happens. Banks will not be forced to sell good credit bonds that just happen to be long-term that they bought before interest rates rose. So the federal government does not have to spend any of its money, but it gives the money that banks need to survive the pressure.
So what is your sense then? How worried are Americans, financial experts like yourself and citizens alike about similar closures potentially in other parts of the banking sector?
It should be really contained because of what the FDIC did with this particular bank, ensuring everyone full. That's reassuring because people are not necessarily going to feel huge pressure if they happen to be way over the $250,000 FDIC insurance limit, which is often not wise. But for companies, they have just too much money, and sometimes they just did it for efficiency because they paid all of their employees from this one bank or a few bank accounts. That's the first thing. The loan facility should prevent a repeat of the problem. That's the second thing. And then there's certain other issues that are a little bit specific to the bank. But the risk of contagion is always people get worried about the next bank, they pull out the money and they fail. But these measures by the FDIC, the Fed, and the Treasury Department overall should largely slow it. So people shouldn't be really too worried about a generalized banking crisis in the United States or even in most of Europe.
And certainly here in Israel, the tech sector closely watching what is unfolding there. Thank you so much. Live from Miami, global economy expert Dr. Michael Szanto. We appreciate your time and your insight.
You're very welcome. Have a great evening.
You too.